Hi, I'm C. Ray, Director of Product and Customer Experience at Factor, and I'm going to talk a little bit here at our booth today about planning once and profiting twice. It's kind of like the measure twice, cut once, but in this case, you do get paid back twice as much for doing your planning up front the correct way. So we're going to be talking about a lot of things that have to do with planning in architecture and engineering firms, budgeting, forecasting, and resourcing, but more importantly, how you keep all those things in sync. We talk a lot during the training sessions that I do on a weekly basis at our webinars about balance. So I'm going to start there. The goal in running your firm profitably is figuring out how to balance the expectations of your clients. We're going to talk about what those expectations are, and then the reality of your team's capacity. Because if you're a professional services company and if you're an architecture or engineering firm, your people's time is your inventory. You can't deliver the things you charge for. You can't hit a certain percentage of completion. You certainly can't bill for time if people aren't spending time to get those things done. So you have this limited capacity to spend. It's not like an inventory you can keep on the shelf and store up until next month. Like, you don't spend it now, it's gone. So you have this limited amount that you can spend. And if you're realistic, you're not going to spend 100% of it. People are going to be doing team meetings and working on proposals and doing training. So you need to have a realistic expectation of how much that capacity you can spend and figure out how you're going to meet those expectations. So this starts at the very beginning of the proposals that you write. And when you first win that proposal and sign the contract and you're kind of figuring out your breakdown of the project and the fees and how much is yours, how much goes to the subs. If you don't bake in balance from the beginning, you don't stand a chance of spending that capacity very well. You're already so off base, you're never going to hit the target. So we'll just start there. My statement down below is what carries this. If the budget, timeline, and scope aren't in balance, you don't stand a chance of balancing that against your team's resource plan. And budget, timeline, and scope are the things we're talking about when we talk about those expectations. So you could sort of say this another way. It really comes down to balancing budget, timeline, and scope. That's the project and the expectations your client has around that project with your team's utilization, which is now a more realistic version of capacity that you can spend. And getting each ingredient there right ensures that profit's baked in from the beginning. Let me explain a little bit about what I mean there. You could make a budget of a project, frankly, anything that you want. If it doesn't align to the timeline you have to deliver and the scope that you're delivering, we all know that's going to be a problem, right? You're going to either undercharge or grossly overcharge and probably not win a lot of projects for the scope you're delivering or the time it takes you to deliver them. Likewise, if that expectation you have for how utilized your team is going to be doesn't add up to a realized revenue per hour that covers your costs of operating as a firm, then you're already off base there. So some of these numbers, things that you think up, well, what's realistic? Maybe our team members could be 75, 80% billable. You do kind of need to know as a firm whether somebody being billable 80% of their time is going to cover the cost of keeping that person employed, not just their salary, but the overhead that it takes to keep them employed per hour. And taking into account, again, utilization is not going to be 100%. They're not going to be billable every hour that you're paying them for. So you've got to have some profit baked into those utilization expectations, and obviously in the ways that you budget your projects and what you sign contracts for and propose to your clients. Once you have those right in each sort of individual ingredient, then it is back to the balancing act, keeping these things balanced so that, again, your team is well utilized. I mean, you could deliver projects and have them land budget-wise and get there on time, and you could get all the scope delivered, but if you don't have enough work and your team is not well utilized, you're not going to bill for their time and you're not going to hit your profit expectations in a month. Likewise, your team could be very, very busy, but you could just not have enough staff and still not be hitting those budget, timeline, and scope expectations. So you start passing out credits, start undercutting your work, and ultimately not realizing as much as your firm could. It's all about balance. It was implied in the title here. What we're trying to do is get our forecasts and these budgets for these projects and our resource plans in alignment. Let's talk about why that's so important. It comes down to this really simple goal. You want to see the results you expect and avoid nasty surprises. What are nasty surprises? Nasty surprises are when you get to the end of the month and you're starting to issue invoices and you realize that you're already so far over budget on some of your projects that you're embarrassed to go back to your client and ask for that additional services or change order that maybe was warranted because you didn't know ahead of time through good forecasting that you were going to be so far over budget. And as a result, you're not going to be as profitable. Major misalignment, right? If those three things are in alignment, you avoid those kinds of nasty surprises and you get the results you expect. You hit profit goals. People are allocated the way that you expect. You hit those expectations your client has around budget and everybody's happy. How do you do it? Well, we're going to need some things, first of all, to make this possible. And then we're going to need to do some things to make this possible. So let's start with what you need. You need well-defined projects with a clear budget, scope, and timeline. And ideally in one place, not, a budget over here in the proposal that we sent off that's now in a PDF somewhere that we never look at again, and a scope that's an ever-growing task list over here in, some toolware that the project manager is logging into and using, and then a timeline that our principals have that it's totally out of alignment with how much actually needs to be delivered and how much we can actually charge for. So get those three things in balance and in the same place so it's really easy to see when they get out of alignment, particularly when you get past your plan and you're starting to track some actuals, which we'll talk about here in a second. The second thing you need is, again, we talked a little bit about this already, realistic utilization expectations. And realistic not only from the standpoint that, hey, in a 40-hour week, people probably are not going to be billable all 40 of those hours, but realistic in terms of what it takes to run your firm also. So that if you look at how much you charge for somebody's hours and what their utilization target is, understanding whether that amount of revenue is going to cover their salary, the overhead, and the other operating costs that you have as a business. Then you're going to need a place that helps you visualize all of the above to determine a real forecast. You could come up with a forecast just based on your utilization and say like, well, we've got all these people in our business and this is how much I charge for their time. And here's what I expect them to hit as a utilization target, and come up with a number and say that's your forecast. But that's totally divorced from all these things about our projects. Like, well, what projects do we actually have? What's the timeline expectation? Like, maybe we have enough work, but if our deadlines for when we're going to be able to bill for certain milestones aren't aligned, we could have some real valleys where we're not hitting any targeted expectations for our clients on completion. So we can't send them a bill for that work yet. So we need a system that puts both of these into a visual that lets us see very quickly if there's misalignment between what we hope to bill from a utilization standpoint, what we have from a pipeline and a work standpoint, and also when we're going to be able to bill by completion of certain scope. And then finally, we're going to need actuals so that after we come up with the best plan in the entire world with this perfect system, like Factor, where you can visualize all of these things, that you'll also be able to track the time entries and expenses, the bills you're getting from your subconsultants, and the invoices you're actually issuing to understand if you're sticking to the plan and where you need to adjust. And that kind of gets us into what you need to do once you have all these things. Let's say you've got a system like Factor where you have all of those things. Here's what you need to do as a firm to use that system effectively. You got to set some standards. You got to make sure your employees understand how you define projects and educate them on balanced budgeting. Make sure that they know how much detail you need and how you break down a budget, how you establish a timeline, and what scope items are most important for you to track. Then you need to set a rhythm for your resource planning, which is the other ingredient that we need to keep in balance here. A lot of this is fairly common practice. It just isn't always very well defined or called out in a lot of firms. So like, for example, a lot of firms meet on at least a weekly basis, maybe bi-weekly, on Monday morning at 10 a.m., coincidentally, a lot of them, to do resource planning and look at not always revenue forecasting, but at least status of projects and where the actuals are at. So if you don't establish a rhythm for doing that and a rhythm for when people are going to enter their time, daily is a strong recommendation, but at least as often as you're resource planning it, at least get everybody's time in on a weekly basis so you know what you're planning against. And then this one I see at effective firms, and I don't see it some firms that struggle a little bit, a rhythm for forecasting revenue and knowing how often you're going to look at what the forecast is for the month and how often you're going to adjust it and when you're going to compare after invoicing whether you hit it or not are all just best practices for using the tools. It goes without saying, those 2 points and all the rest are pretty difficult to do if you don't have all the stuff on the previous slide. Like without these things, you can really want to do everything on this page, but it's going to be very difficult at best. You can get it done, but you're going to spend so much more time trying to reconcile updated budgets with the actual time entries that are coming in and the changed, timeline in this other system and the task list somebody's tracking in a different spreadsheet. So again, it really helps get all this into one system and make sure that the plan is done in balance in the first place. So that way, when you are doing your resource planning and people are capturing actuals and you're updating your revenue forecast, you're doing it with all of the different points of data that you need to correlate. Setting clear expectations for what you check and how often. And the final point here about getting consistent about how you respond. This is where we're going to stray a little bit outside of systems and just talk a little bit about firm management. For your project managers, or even just your general time entering employees who may not be spending a lot of time in your management system, but are just doing the work, for them to have a clear expectation of when it's expected to provide data and exactly what data to provide, not only makes it easier for them to follow that and easier for you to help with compliance, but it allows you to get really consistent about how you respond. And then there's this flywheel effect that happens. So they're really clear about what they need to deliver. That lets you get really consistent about how you respond. Okay, we're a little past budget. Understandable when that happens because we have all the ingredients that we need to be able to see, timeline and budget, and now the actuals as far as our time entries, et cetera, et cetera. This is how we respond. We either do this, we reallocate less expensive resources to the project, or we immediately go back to the client with a justification for additional services, or it might be however you respond based on what your contracts will let you do and your clients will accept. That kind of consistency makes it that much psychologically safer for people to then provide the data that they need to provide, even when that data is not so great. And that's the data that you need. You need the not so great data, not just the rosy outlook data, because otherwise you will still end up with those nasty surprises at the end of your project. So tying this all together, in order to keep your budgets for your projects and your resource plans and your forecasts all in sync, it's about balance. It's making sure that that budget is balanced with timeline and scope expectations. It's about making sure that your resource plans are based on a balanced look at what is really realistic from a utilization standpoint. It's making sure that when you utilize people or plan their utilization on those projects, that you're not going to break the budget, miss the timeline, leave some of that scope on the table. And doing that means that the forecast you have is trustworthy and it's not a pain in the neck to update because you don't have to go collect the data from a bunch of different systems. You don't have to collect it in different ways from different project managers who are operating in different ways. And it ultimately enables you to not just get more predictable about your business today, but to keep it in sync in a way that lets you grow, because now there are really clear expectations for what you do when and consistent ways that you respond to it. So when you have new project managers or people that get promoted into those positions, or you start to grow in terms of the number of projects you're trying to handle and the amount of headcount that you're trying to manage in resource planning, you already have this basis to start from and you're enabled to do so.